Hi teachers, this is John Godbey, founder of Teacher Homebuyer Real Estate. Today I want to talk to you about down payments and closing costs. These are the two big expenses you have when you buy a house. The down payment is your share of the cost of the house, and the closing costs cover such things as the loan and the title, the insurance, and the taxes on the house. You're responsible for both of these. We're going to look at both of these in detail, then we're going to see how they appear on the settlement statement that you receive in closing, and then we'll talk about how Teacher Homebuyer can help you manage both these major costs. Let's get started. The down payment is your portion of the cost of the house. It is not the expenses associated with the purchase. What does that mean? Well, if you look at the column on the left-hand side, you'll see the yellow portion says your loan amount 96.5%. This is for a Federal Housing Administration, FHA, loan. That's the portion of the sales price of the home that's going to be paid for by your mortgage. And mortgage is the same thing as a loan. You see on the top of that column a little blue part that says your down payment 3.5%. That portion is the part of the house that you are paying for out of your funds. Usually that is required to be out of your own pocket. It can't be borrowed money. However, if you're a teacher in the state of Texas, you can get down payment assistance that will pay your down payment for you. We'll talk more about that in a minute. In the last section, we looked at the cost of the house, which is the sales price of the house, this gray arrow that goes from the bottom to this point up here. That included your loan amount, which was 96.5%, plus your down payment of 3.5%. That gives you the sales price of the house. But added on top of that now, we have closing costs and prepaids, which are the expenses to cover the cost of transacting the sale of the house. Now, what are we talking about when we talk about those expenses? Closing costs include loan origination, which is the cost of the loan, title insurance policy, which insures your title, the appraisal, which gives you the value of the house, the lawyer's fee for looking at the contracts, escrow accounts set up the money that the bank needs to pay your taxes and insurance, the closing fee that the title company charges for closing, the recording fees and the state bond fee, which are fees paid to the government for recording the sale, the survey, which is sometimes required, then the prepaids, which are your mortgage insurance, which is the PMI on your FHA loan, the property tax, and the homeowner's insurance. These are the closing costs that must be reckoned into the cost of the house because you need all of these services when you buy. Now we're going to look at closing costs in your settlement statement, which is the accounting that you get when you are closing your house and ready to move in at the very end of your purchase. You'll notice that closing costs are referred to here as settlement charges. The realtor's commissions were $6,495. Those are paid by the seller, not by the buyer. But you look at the next section, which are the expenses concerned with the loan. Those are expenses paid by the buyer. There's the origination fee, which was $3,700. There was credit report, tax service, etc. Those things were nearly $4,000 expense for the buyer. Then the bank required that certain items be paid in advance. Then the mortgage insurance premium to secure the FHA loan, $2,193. That's a huge amount. Then the homeowner's insurance, $1,258. Those must be paid in closing up front. In the next section, you see reserves deposited with lender. These are money set aside to pay your taxes, your mortgage insurance, and your homeowner's insurance. And the lender here wants $1,555 to open those accounts. That money will be used to pay your bills. The next section are title charges. There's $612 for the title service and $1,103 for the title insurance. Then we go to the next section. It's $112 for government recording charges. And then in the next section, $225 was charged for a survey because at this particular house there was no survey to be had. So the buyer's expenses were $10,922.33. That's a huge amount of closing costs. We'll go on to the next section to figure out how those costs were covered with Teacher Homebuyer. This is page 1 of the settlement statement. We just finished looking at page 2, which had all of the closing costs. Now we're going to put it into the big picture. On the left-hand side, you see a column that's for the buyer, and on the right-hand side, you see the column that's for the seller. We're going to look at the buyer's column to see how this works out. We're going to take each one of these expenses from the top to the bottom. The contract sales price for the house was $129,900. The settlement charges, or the closing costs, were $10,922. So the total amount owed by the buyer was $140,822.33. That sounds pretty grim. She's paying $10,000 more than the cost of the house. But let's look at the money she has coming back to her. The deposit money that she put up of $1,000 is now recredited to her. The $127,546 for the mortgage has come in to finance her. She applied for and received a teacher's grant, so she got $6,377. Then the title policy was paid for by the seller on behalf of the buyer. That was $1,003, plus the seller agreed to pay for $5,010 of closing costs. The taxes for the time the seller lived in the house during the year amounted to $1,220, so those are credited to the buyer for the taxes that fall due at the end of the year. And the $100 in option fee that the buyer paid comes back to her as $100. So the total amount she has coming in to help her pay for the house is $142,257.33. That means that she has more money coming in than she was spending. So she received, at the bottom of the column, the bottom line, as they say, $1,435, a check from the title company to her for moving into the house. Most teachers are not used to moving around large amounts of money, so the idea of down payment and closing costs can be scary. The purpose of Teacher Homebuyer is to help school employees realize that the goal of home ownership is truly affordable. The teacher in our example didn't have a lot in savings, yet using the Teacher Homebuyer program, she was able to cover both her down payment and her closing costs and even get money back at closing. While we can't do this for everyone, we can save you significant amounts of money on closing day. Thank you for taking time to learn about down payment and closing costs.